Did you know that April is Financial Literacy Month? So in today's Money Watch, we are talking about why you need to know about the Federal Reserve. That is America's central bank. That's lesson number one. We'll explain what a central bank is in lesson number two shortly. So, of course, the Federal Reserve Chairman, Jerome Powell, has been in the news a lot lately. President Trump called him a, quote, major loser, demanding that he lower interest rates. CBS News business analyst Jill Schlesinger is here to get more into that and tell us what the Fed does, what is a central bank, why people should pay attention.
Okay, so before 1913, the United States had a series of bank panics, runs. Remember Silicon Valley Bank just a couple of years ago? That was one bank. We used to have that ongoing, like every 5, 6, 7 years. And there was no institution of the United States that would make sure that that didn't happen. In 1913, Congress created the Federal Reserve Bank of the United States, with its main job being, hey, bank stability. We can't have these banks. And there would be a board of governors, there'd be a chair, and over time, the mantra of the Fed was, yes, stability, but it also turned into something different. In 1977, Congress said, we also want to add a couple jobs for this bank stability organization. One is we want to have the Fed focus on economic growth, make sure that it has interest rates moving to foster an economy that can grow and create jobs. But we also want the Fed to control inflation. It's called price stability. This is the dual mandate of the Fed. And I think that the most important part of the Federal Reserve is that it was established to be an independent agency. Because as we've seen this week, when politicians get antsy about the economy, they want the Fed to do something, usually to lower interest rates.
So that people don't leave their money in the bank and they spend more money, right?
Well, think of it this way. When the Federal Reserve lowers interest rates, it's lending to banks at a lower rate, and then the banks will lend to us at lower rates, and we will borrow and spend. That goes for businesses as well. Okay. So it's really important, this idea of Fed independence. That's why we saw markets moving dramatically, because it was feared that the president was saying to the Fed, do this or else. And that kind of unnerved investors around the world.
So every regular person watching should pay attention to the Fed because
it's one of the few parts of the economy where I say every single person is impacted by the Fed. Why? Because people either are borrowers or they're savers. If you are a borrower, you really do think about the rates that you're paying. Maybe it's a credit card balance. Maybe it is actually an auto loan. Maybe you want to start a new business. The way the Fed moves interest rates impacts you. And if you're a saver, you're lucky enough to be a saver, you worry about the Fed moving interest rates because you want those interest rates to be higher. In essence, the Federal Reserve has become the most important player in the economy for all Americans.
I disagree. I think you're the most important player in the economy for all Americans.
Thank you.
Hear, hear. Jill Schlesinger, thank you so much. And if you at home have a question for Jill, don't be shy. Send her an email. Just write to askjill@cbs.com, and she can answer it on this very show.